Welcome to Bare Naked Money, the podcast where we strip down the complex world of finance to its bare essentials, with your hosts Josh Shellick and Colin White, portfolio managers with Verican Capital Management Inc.
Well, Josh, we're Liberation Day +1, so this is kind of like the Boxing Day of Liberation Day, the day after, and it seems the world's on fire.
Do you feel liberated?
I don't know what liberation feels like, but I don't imagine this is what it should be. No.
I think if I am correct, it feels like higher prices on everything your country imports. I'm pretty sure
Yeah,
that's what it feels like.
yeah. No matter what your country is, actually, like it's all of them, and countries we've never heard about have been affected by this. So it's pretty all-encompassing. But the market seems to have reacted decisively. It seems to be bad news for a day anyway.
Yeah, for now, I think one of the headlines said this morning it was worse than the worst possible news. So
Worse than wow.
could figure that out, right?
I'm not sure where they go from there.
Yeah, that seems a little bit extreme to me, as headlines tend to be, but market's decisively down today with global stocks down about 3%. So it's being reflected in the values of a lot of businesses out there. It's being viewed very negatively at the moment.
So year to date, the market's down 4%.
Depends what market you're looking at. I think in Canada here, that's probably about right. South of the border, it's more than that. But for most markets, and actually I think Europe's still up. So depends where you look. Depends which market you're talking about. Globally, we're probably down about that same level. So it hasn't been a great start to the year. Also not a catastrophe. A lot of people would probably be a lot more pessimistic than their portfolios are actually showing at the moment.
Well, it was interesting for me that we kind of crossed a threshold today because everybody keeps asking us about is there anything out there to buy, and it was interesting to see our group get a little excited today because there was some really beat up companies, and I don't know how much you want to share from how we made the sausage, but we got excited enough to do some stuff.
Yeah. Well, I've had those questions too from clients over the past few weeks or so, especially those that are a little bit more comfortable with volatility, asking, is now the time to put more money into the market? And I've been saying, like, we're down like 1-2% on the year. Just pump the brakes a little bit. But now, and I said that the headline number, we're down about 3% on the markets globally. But if you split that apart a little bit, there's some parts of the market that are getting really punished today, and those I think that on the surface have a bit more exposure to international trade are the ones that are getting hurt
Or
the most.
perceived exposure to
Exactly.
international event, right? Because again,
Yep.
these
Yep.
these decisions are all happening in an instant without necessarily the complete due diligence that would be required to get a nuanced answer to these questions. So
That's right. Well, I think the due diligence required doesn't really exist because nobody really knows, right? You
yeah,
don't know exactly what the impact is going to be. You don't know how capable some of these businesses are at pivoting away from where they're sourcing product or where they're selling product. We don't know how long the tariffs are going to be in place. So, and when prices increase, it doesn't necessarily mean things are bad for the business. It just means maybe there's slightly less demand because prices are higher. So there's a lot of unknowns. So anybody that says confidently they know how this is going to impact business X or business Y, they're fooling themselves and fooling everybody else too. So that's where we get kind of interested, because there are some businesses that we think are super high quality that are out there that sure are exposed to international trade in some respects, but they're down 15-20% today.
yeah.
And I just don't see profits, because technically or theoretically a business is worth all of its future profits discounted to today. Do you think that these tariffs have discounted their revenues and profits by 20% going forward in perpetuity? I'm simplifying things a little bit there, but the answer for us is probably not.
Yeah, well, I mean, for me, I look for a couple of key words in market commentary to understand where we are, and the two big ones I look for are plunge and soar. Because like if somebody says
Yeah.
to me, you get on an elevator and it's got two buttons, one's plunge and one's soar, like that's an elevator you don't want to stay on. But
Which one are you picking?
well, exactly. I mean, one
Yeah.
means go up and one go down, but they seem so much more dramatic than that. But and again, I think that we need to add the normal caveat that we put on something like this. There are some individuals who are going through absolute hell of this. There are industries that are laying off massive amounts of their workforce. There are people that are within a couple of years of retirement whose livelihoods are being dramatically disrupted right now. So there's absolutely human toll playing, and I don't want for a second to come off as glib or unfeeling, but people turn to us for a market commentary, and the market's going to market, and the capital allocation is going to continue. And I think the biggest thing I'm waiting for is, okay, what's the next announcement? Because there needs to be a next announcement, and is that going to come out of the U.S. or is that going to come out of somewhere else? And the ball's going to keep bouncing. But I'd like to give a shout out to all my gold friends today because I checked, gold's down today too, and
No,
a,
how
sh-
could it be?
a shout out to my Bitcoin friends. Bitcoin's down today too. So for all those people who have told me over and over again that these are such great places to be and times of tumult, we have tumult on the turf, and apparently we've been let down again. And I'm waiting for the comments to come as to why I'm wrong and somebody to stand something up to prove me wrong yet again.
Right. Well, it's important to acknowledge the human impact. It's also important to acknowledge people are feeling pretty bad as investors this morning,
Yeah.
right? Like there are people that have lots of money saved up or not a lot of money saved up, whatever it is to you, that are feeling pretty beat down this morning, and that's being reflected in the values of their portfolio. And they're going to be upset, they're going to be frustrated, they're going to be fearful.
Yeah.
And all of these are emotions that don't really mix well with making smart or prudent financial decisions. And that's the thing that's important to remember as we sit here today. It's very tough to make good financial decisions under periods of stress like we have at the moment.
Yeah, and again, that's why we exist, professionally. That's our role, to talk to clients and put things in context for an individual circumstance, because everybody's circumstance is a bit different, and everybody's reality is a little bit different. And that's up to a good advisor, a good advisory team to communicate with somebody to give them confidence in their portfolio. So this is where hopefully people are way more interested in what we have to say right now, which is nice. It's nice to be popular. So hopefully we can provide some comfort, and we're here. If people need to talk, we have time, we have interest, and we have some knowledge, and we can help out. So is there anything else other than the disappointment in gold and Bitcoin that you found odd today?
I think that the response has been a bit more dramatic than I would have expected. I actually am not surprised to see down 2 or 3% or whatever it is based off of all the things that were announced. I am surprised to see some businesses down, 20%. Like, I just don't, I'm not quite there yet in thinking that the effect is going to be that dramatic or that long
Permanent.
standing.
Yeah.
Exactly. Permanent. Permanent's a great word.
Yeah.
Yeah.
Yeah. No. It opens up the other variable to all these things. What was priced into the market? What were people's expectations going into today? Which
Yeah.
is kind of the final piece you need to get right if you're trying to time these things. Like, you have to understand what's priced into the market, because the market's going to react not necessarily to the news. It's going to react to what it's done to the expectation. So I think that's part of what we're seeing happen. Like, there's the expectations on specific industries have changed far more, and which is affecting the overall market. So. But we're going to stay frosty. We're going to stay plugged in. We're going to stay involved, and we're going to keep trying to put out as much commentary as we think people are interested in. And if anybody has any specific questions, by all means, reach out to us, and we'll do our best to put together a cohesive answer. For the 30 seconds, it's going to be current. Because as we're talking and recording this at 3:14 Eastern Daylight Savings Time, what day is this? This is the April the 3rd. This may be out of date by the time we finish recording it. So we'll try to keep things updated.
Do you want to leave people with a couple to-dos or two not-dos?
Oh, more than anything, Josh, I was waiting for your list. I knew you had bullet points there. Come on, man. Stop holding out.
So I think what's more important is what's not to do. And that's try to make wholesale changes to whatever your investment philosophy or approach is. It's also, in our view, important not to irrationally sell out everything or any large parts of your portfolio that are intended for the long term. If you have long-term money, these are the periods of time that test your patience, but are the absolute most important periods of time to stay the course. So that's the not to do's, is not sell out, not do anything rash, or make any wholesale changes. Then
Yeah, and
on the
sorry, but having confidence that you know what comes next. I mean, we were
not
just
to do.
talking today.
Yeah.
Yeah, exactly. So I mean, everybody, it's funny. This is the time those people are going to cash out and go to cash, and we're going to look back and say, hey, look, that person picked exactly the wrong time to do it. Because again, in the moment, you think, hey, this is all bad and it's only going to get worse from here. That kind
Yeah.
of confidence is, being overconfident in any direction is always dangerous.
Yeah. And I would say what you want to do at this point, be prepared for a little bit of volatility here. We don't know that this is the worst day or as bad as it can get. So can it get worse? Sure. So just be prepared to have to be a little bit more patient and a little bit more uncomfortable than you would normally like to be.
Yep. And the other thing you can do is Google fainting goats and go to YouTube and watch all of the videos on fainting goats, because it'll put a smile on your face and maybe replace some of the negative emotions you're having with watching the stock market news today.
I'm going to do that now.
All right, Josh.
Thanks,
We'll be
Colin.
talking.
Yep.
For more information on the subject of today's podcast or any other financial topic, please visit us online at verican.com. That's VERECAN.com. There's plenty of information there, or you can reach out to someone on the team. Thanks for listening. Please note, the information provided in this podcast is for general information purposes only. It is not intended as financial, investment, legal, tax, accounting, or other professional advice. Our discussions are not a solicitation to buy or sell any securities or to make any specific investments. Any decisions, based on information contained in this podcast, are the sole responsibility of the listener. We strongly advise consulting with a professional financial advisor before making any financial decisions. Listeners should be aware that investing involves risks and that past performance is not indicative of future results. Bare Naked Money is produced by Verican Capital Management Inc., a licensed portfolio management company in Canada. We operate under the regulatory framework established by the provincial securities commissions in the provinces within which we operate. The views expressed in the podcast are our own and do not necessarily reflect the official policy or position of any regulatory authority. Remember, at Verican Capital Management Inc., we focus on aligning our goals with yours, prioritizing integrity and transparency. For more information about us and our services, please visit our website. Thank you for listening, and let's continue to challenge the norms of the financial services industry together.